Up first, we talk about what's happening in the US markets and what that really bodes for Indian equities. The Fed chair, Jerome Powell, he believes that strong US economic growth is going to allow policymakers to take their time in deciding how far and how fast they will lower interest rates. He said, and I quote what he said, "The economy is not sending any signals that we need to be in a hurry to lower rates." This is what he said. So in an upbeat assessment of the current conditions, the central bank leader calling the domestic growth, again in their words, by far the best of any major economy in the world. That's what we got. Specifically, he says the labor market is holding up well, despite disappointing job growth in October, which he largely attributed to the damage from the storm in the southeast and also those labor strikes. But on the question of inflation, Jerome Powell has cited progress that has been broad-based, noting that Fed officials are expecting it to continue to drift back towards the central bank's 2% target. In our own markets, meanwhile, the Nifty has continued that decline, and now we're seeing 7 sessions on the trot, this kind of decline, and today we've closed below 23,500. And in the broader markets, the Bank Nifty and the mid-cap we've seen that manage to outperform the benchmarks, but metals have emerged as the top sectoral gainer and IT has been the top drag. Let's get a sense of what has happened in trade today, and for that my colleague Snehi is here with a roundup of today's trading action. Snehi, how did it look when we closed for business today?
Well, absolutely. First up, taking a look at the entire market today, it's been a rather lackluster trading day coming in. You had Nifty, like you mentioned, that closed down 0.3% below that 23,500 level. You had Sensex also in tandem with the Nifty, 0.3% cut coming in on that front as well. Broader markets, Nifty small cap was immensely under pressure, 0.5% cut coming in on that front. But if you take a look at Nifty mid cap, that's closed absolutely flat. But in the initial first half of the day, of the trading session rather, it was up in the green positively. So some show of strength coming in from mid caps, but towards the day's end that also fizzled out. India VIX has also spiked up 3%, which is now at 15.17. So that's also another slight point of worry. But like you mentioned, Nifty Bank has done pretty well for itself. And it's not only Nifty Bank, Nifty PSU Bank and Nifty Financial. So the entire financials basket has done well. Top sectoral gainer in trade today was Nifty Metals on the back of China cancelling their export tax rebate. So on the back of that, you had Hindalco, Nalco, Vedanta, all the companies back home that were shining in today's trade. Also, what did well today was the entire FMCG pack. However, on the flip side, the top gainer from last week, IT, was the biggest loser today. You had the likes of TCS, Wipro, LTI, Mindtree, Infosys, all of these stocks under deep selling pressure today. Just getting a little stock specific now, action being seen on Honasa Consumer, poor set of Q2 results and weak management commentary. That stock was locked lower by 20%. City gas distribution companies, the likes of IGL, MGL, have also seen double-digit cuts coming in. So overall, it's been a rather lackluster trading day coming in. Nifty has once again ended below the 23,500 mark.
All right, thanks very much for walking us through today's trading action. But what's in store in times to come, at least in the short term? Let's get an understanding. From Chicago, we are joined by Anurag Singh, Managing Partner at Ansid Capital, and a little closer home, Sudeep Bandyopadhyay is with us, Group Chairman of IndiTrade Capital. Gentlemen, thanks for making the time for joining us on Business at 9 here on ET Now tonight. Anurag Singh, first to you. You know, there is what the Fed chair has said, and yes, he's sounding happy about the way the economy is, but he also says there are no indications to suggest that they need to go any faster with interest rate cuts. How do you read into the comments and how investors are reacting to it?
Vikram, good evening, and good evening to Sudeep sir. You know, we keep meeting on different panels. So Vikram, look, quick take on this is the market is trying to assess what is the terminal rate for Federal Reserve, right?
Right.
And now, you know, we know since 2008, it was like a zero rate. It was kind of still a state of emergency, right? It extended for far too long. And that was a Federal Reserve mistake. But right now, the question is, looking at the strength of US economy, what is the terminal rate? What is the so-called normal rate of FOMC for Federal Reserve? And what is the normal 10-year yield rate, right? Market expected that Federal Reserve eventually will get down to 3% very quickly within 2025. I think it was little too much to expect. My sense is the market, the terminal rate for Federal Reserve should be around 3.5%, looking at the strength of the economy.
Sure.
Now that, I mean, looking at 3.5, all they have to do is they have to go from 4.5 to 3.5, which is about 100 basis point cuts, and they have the entire year to get that, right?
Yeah.
So I think we should expect from now onwards that it will be a 25 basis point if needed, and then a pause, and then they'll look at the data. So
Right.
that's where we are. It all depends on your expectation, but I think we should expect that economy will ultimately pause at some 3.5% terminal rate.
Fair enough.
And not at 3%.
Mr. Bandyopadhyay, what's your reading of this Trump rally? There are indications that it is actually fizzling out. There is uncertainty about how much of a positive Trump's policies are actually going to be and how that's going to impact the economy, whether it's going to be inflationary or not. And that's having its own impact on the way the markets on Wall Street are moving, and it has an impact on Indian equities as well. Do you really believe that Trump rally is fizzling out now?
Good evening, Vikram and Anurag. I think what's happening is if you read the Fed chair statement, I think there is an underlying message as well. Multiple policies which is being talked about by Trump, and if we recollect Trump's last term, I think many of the measures will end up stoking inflation in US economy. Whether it's the tax cut, whether it's the high tariffs being talked about, and multiple other policies. So Fed will be extremely careful at this juncture when all these policies and all these measures are being talked about. The inflation may not come down as fast as it was expected, and Fed will be careful in cutting rates. Now, look at the bond yields in US, and it was almost touching 4.5. It's shade below that. And under the circumstances, when the the risk-free return is about 4.5, close to 4.5, the lure of equity for an investor who is little conservative comes down. So obviously under the circumstances, equity has probably will have a tendency to lose the extra edge, and we have to be careful about that. Now, it's always a trade-off between risk-free return and risk return. So if the risk-free return remains attractive, I think the equity market will attract less capital, and that doesn't bode well for the equity markets. And we have to keep this in mind.
Certainly. We keep this in mind, and certain indications are right there on the wall. Anurag, you see them? The S&P remains near the record high levels. It's up 23% if you look at its performance this year. NASDAQ, at least today, is excited with the rise in Tesla stock, but some of that enthusiasm has been tempered in recent days. What do you see coming in the US markets that's going to affect Indian equities now?
So Vikram, out here, to use the phrase, the animal spirits have been kind of unleashed back again, right? So I don't see, I think for the next 4 years, Trump government is very friendly, very capitalistic, very low on government expenses, and more, free market, let the market find its equilibrium, low regulation, light touch regulation, right? So, the entire regime that this Biden administration had unleashed, especially with, the antitrust regulations and anti-mergers and everything. I mean, can you believe it? 2 companies producing the luxury handbags of $100, $200 plus were not allowed to merge because it was considered as a necessity for women. Like, this was the craziness that was underway. I think ultimately the deal, and you see this in Goldman Sachs and the Morgan Stanley prizes, the deal making is back on the table, business is back on the table, capitalism is back on the table, right? So I think overall it bodes very well for the US market. We have to just take our side off from the immediate rally and the little, kind of a pause for the moment, right? But ultimately market is directionally looking very positive and very up, and which is great for the size of US economy. That also means, though, that the dollar continues to be stronger. By the way, that has to do with the Federal Reserve rate pause as well, right? So as long as there is a strong dollar and there is a Federal Reserve is slow in cutting rates, the economy still continues to be strong despite, because of the policy intervention by the Trump government. I think ultimately the money will find more hiding places within US market. And that's what you see ultimately is reflecting in the Indian markets, because money is exiting some of these sectors from India, and actually not only from India, but across the world, and hiding in the dollar assets, Vikram.
Right. So is that going to continue happening, Mr. Bandyopadhyay? At this time, there is something that is clouding the picture for further interest rate cuts by the Fed that we spoke about. And that fear has helped push the benchmark US 10-year yield to that highest level that we've seen it at in more than 5 years. This happened on Friday itself. And we're seeing the impact play out in sectors like IT. Do you see that continuing now, at least for a couple of more months, as we get more clarity on our own corporate earnings? Mr. Bandyopadhyay.
Yeah, absolutely. I think, we in India have a question mark on corporate earnings, and that is kind of spooking the domestic investors also to an extent. Look, Vikram, the valuations were at a level where the margin of error, as far as Indian stocks are concerned, was very, very limited. And under that circumstances, when the earnings start coming below expectations, I think market was bound to take a tumble. And pretty much that's happened in India. But having said that, I think I do see silver lining as far as Indian markets are concerned. The urban consumption slump, which we did see in the Q2, I think we will get over that. Q3 is a festive quarter. Q4 normally is a strong quarter. So I'm positive that Q3, Q4 will resurrect to an extent corporate earnings. It won't be as bad as it was in Q2 generally. So that should improve things. But of course, the other big issue is money moving out of India. We have a strong SIP flow. We have a strong domestic flow. But that definitely will not be good enough to keep propelling the market upwards if the FIIs continue selling and taking money out of India. We have seen this getting played out since end of September, and we are still seeing that. As Anurag was mentioning, and as I think the writing on the wall is clear, we are going to have a business-friendly administration in US, and they will do everything possible to support the markets because they believe in free markets. Of course, I have a big worry as far as inflation is concerned in US because many of the Trump's policies are inflationary, and if that happens, we'll have to wait and watch and see how things unfold.
Yes, but Mr. Bandyopadhyay, like Anurag is saying that right now animal spirits seem to have been unleashed. Is that a net positive for Indian equities or not?
Well, as far as Indian equities are concerned, it is eventually positive because, look, I firmly believe that the tariff policy which Trump government is talking about will be differentiated. China, they're talking about a 60% tariff. Other countries, including India, about 10% tariff. This definitely is music to Indian exporters and Indian companies having business in US. So I think there will be a significant advantage for a whole lot of Indian companies which are exporting into India. There will be new opportunities also coming for a lot of Indian corporates. So I'm sure this is going to be good news. As far as FII inflows are concerned, I strongly believe at some stage, when inflation will start taking hold in US, there will be money moving back to India. Of course, Indian RBI in India has a challenging task to balance the situation as it stands today. US is cutting rates, whereas Indian inflation, because of the food inflation, has gone up.
But Mr. Bandyopadhyay, if I may interject, will the RBI also wait on its interest rate cutting cycle if the Fed decides that not too much, at least as of now, by way of the amount of interest rate cuts?
Well, at this stage, RBI doesn't have much of a choice, Vikram, because food inflation is so high.
Yes.
There is very little opportunity for RBI to cut rates. I am positive as far as the future is concerned. I believe that the crop arrival, should bring down the food inflation. And if the food inflation does come down, it is definitely warranted for RBI to cut interest rates, may not be in December, but in February. RBI needs to give a boost to the economy. We've been talking about slowdown in economy and the initial signs of slowdown. So RBI should also act sooner the better, provided food inflation comes down.
And Anurag, thank you very much for joining us with your take on the current state of both American equities and Indian equities. One is going to have an impact on the other. There is no taking away from that. And the Fed's comments need to be in the backdrop against what is happening right now.
If you like this video, then like, share and subscribe to ET Now.